You might think the banking system is secure. Even if you are one of America's richest and most respected investors, can you still be fooled? Yes, you absolutely can. And were. And the man who fooled them all was Bernie Madoff, the king of Wall Street, former chairman of NASDAQ, a god in the world of finance. But in reality, he was a cold-hearted con artist who ran a $65 billion scam for over 40 years. A scam so massive that its impact still echoes in the financial history of the United States. This is a story of trust, deception, and greed. A story that changed the financial world forever. So let's dive into the world's biggest Ponzi scheme and uncover the truth behind Bernie Madoff's empire. Bernard Lawrence Madoff was born in 1938 in Queens, New York. Growing up in a modest Jewish-American family, Bernie was a boy with an unusual fascination for numbers and the ways money could grow. While other kids played baseball or hung out with friends, Bernie was busy reading books on investing and tracking stock prices in newspapers. One anecdote from his youth recalls him selling stamps and coins to neighbors, slowly building a small fortune from childhood trades. This early experience kindled his ambition and shaped his understanding of value and trust. By the time he graduated high school, Bernie was determined to enter the world of finance. In 1960, with a mere $5,000 in savings, money he had painstakingly collected, he founded Bernard L. Madoff Investment Securities from a small office in Manhattan. Despite the modest beginning, Bernie's dreams were enormous. His firm quickly grew from a tiny trading business into one of the biggest players on NASDAQ. Bernie's charm and intellect caught the attention of Wall Street's elite. He became one of the first chairmen of NASDAQ, earning the admiration of many. Bernie wasn't just an investor. He was a symbol of financial genius and security. People trusted him implicitly, believing that investing with Madoff meant steady, guaranteed profits. But beneath that polished surface lay a dark secret, one that would ultimately devastate thousands. Bernie claimed to use a trading method called the split-strike conversion strategy. Imagine buying stocks while simultaneously protecting your investment with insurance contracts called puts and calls. This, Bernie said, guaranteed steady returns regardless of market ups and downs. To the outside world, it sounded brilliant and safe. Bernie spoke with confidence and authority, qualities that silenced any doubts. Investors didn't ask many questions because Bernie seemed credible. But the truth was shocking. Bernie never bought those stocks or options. No trades were executed. Instead, Bernie operated a classic Ponzi scheme, where money from new investors was used to pay fake returns to earlier investors, creating the illusion of profits. This was a house of cards built on deception, growing bigger and riskier every year. Picture this: a landlord in a small town who promises tenants they can live rent-free forever, paying older tenants using rent collected from newcomers. As long as new tenants keep coming, the landlord can keep the promise. But once new tenants stop arriving, the scheme collapses and everyone loses. Bernie's scam worked the same way, using new money to pay off old promises, buying time but creating no real wealth. His office had no real trading floor, no bustling activity. Just an old IBM computer and a few employees who fabricated fake spreadsheets and reports. The falsified data was so convincing that even seasoned financial professionals were fooled. What made Bernie's scam especially dangerous was the caliber of people he attracted. His client list read like a who's who of wealth, fame, and influence. Hollywood director Steven Spielberg was one. Famous actors Kevin Bacon and Kira Sedgwick trusted Bernie with their investments. Nobel Prize-winning economists believed in his promises. Major banks like HSBC, BNP Paribas, and Santander invested heavily. The hedge fund Fairfield Greenwich Group poured billions of dollars into Bernie's firm. Even charities like the Alfreda Fund, which supported Holocaust survivors, invested money through him. Bernie created an aura of exclusivity. Investing with him felt like joining an elite club. Lavish parties, fancy dinners, and personal relationships made clients feel special, reinforcing their trust. Ordinary people waited eagerly to invest, dreaming of secure, growing wealth. The sense of honor in being chosen to invest with Bernie masked the danger lurking beneath. Victims tell stories of heartbreak and betrayal. One said, "It wasn't just about losing money. It was losing the security and dreams we worked a lifetime for." Many charities closed their doors. Seniors lost their retirement funds overnight. Families faced financial ruin. The emotional scars ran deep, with depression, broken marriages, and despair following. The human cost of Bernie's scam was as devastating as the financial one. Despite warning signs, the scam lasted over 40 years. How was this possible? The Securities and Exchange Commission, known as the SEC, was supposed to protect investors. Yet it repeatedly failed to uncover Bernie's fraud. In 2000, a financial analyst named Harry Markopolos became suspicious. He studied Bernie's returns and realized they were mathematically impossible. Markopolos created a detailed 17-page report outlining how Bernie's numbers didn't add up. He warned the SEC multiple times, but the agency ignored him. Why? Bernie was a respected figure, a former NASDAQ chairman. Questioning him seemed almost sacrilegious. This combination of trust, reputation, and bureaucratic complacency allowed Bernie's deception to continue. Markopolos felt like a lone whistleblower ignored by the system, watching the scam grow out of control. The crisis finally hit in 2008 during the global financial meltdown. Markets crashed, investors panicked, and everyone wanted their money back. Bernie's Ponzi scheme relied on new money to pay old investors, but now the money dried up. Facing a liquidity crisis, Bernie confessed to his sons, "It's all one big lie." Horrified, his sons contacted the FBI. On December 11, 2008, Bernie was arrested in a Manhattan office. When handcuffed, he said calmly, "I knew this day would come." The mighty king of Wall Street had fallen, toppled by his own lies. Inside Bernie's firm, panic and disbelief spread. Employees who had ignored suspicions faced a harsh reality. Bernie pled guilty and was sentenced to 150 years in prison. His luxury yacht, apartments, and jewelry were seized. But the damage went far beyond assets. His two sons suffered tragic fates. Mark died by suicide in 2010, and Andrew passed away from cancer in 2014. Bernie's wife, Ruth, became socially isolated. Over 3,000 families lost their life savings. Many victims never recovered financially or emotionally. One couple said, "We lost more than money. We lost our future." The emotional devastation was profound. Why did so many fail to see the truth? Bernie's charismatic personality played a role. He was trustworthy and persuasive. His elite clientele reassured others. If they invest, it must be safe. His steady, seemingly reliable returns lulled investors into complacency. And the SEC's failure to act let the deception grow unchecked. It was a perfect storm of psychology, power, and regulatory failure. Bernie knew exactly how to manipulate human emotions, trust, greed, and fear. After Bernie's arrest, regulators revamped rules to prevent future disasters. Victims received some compensation, though many losses remain. Bernie's story inspired books, documentaries, and movies like Madoff, The Monster of Wall Street. His legacy is a stark warning. Behind success can hide dangerous lies. If someone promises safe, guaranteed profits, be suspicious. Reputation doesn't guarantee honesty. Always ask questions and demand transparency. Bernie Madoff taught the world one key lesson. Scams thrive when we think, "That could never happen to me." Bernie died in prison in 2021, but his shadow still looms over global finance. He stole more than billions. He stole trust, security, and futures. Today, you've heard the story of the world's most infamous fraud. Share it, stay alert, and make informed choices. In real life, fraudsters are scarier than any movie villain.